Are we in the midst of a major pull down, or is this going to be a really good buying opportunity? We're going to dig into that today. My name is Brian Cannon, and welcome to Markets in 5. This chart, we again discussed the areas of support and resistance. What's interesting is last week we had a major pull down or a pullback at this point, we'll call it. We don't know if it's going to be major. We'll find out. We'll keep monitoring. But lots of downward pressure, enough to not only take out this upward trend line that we were watching, but also blew through the 20-day moving average. Both of those are pretty big warning signs for us. What's interesting is we had a nice update after the big pull down, and you see this wick, the top of this candlestick. Went all the way back through to the upside, but the momentum couldn't hold it, so it finished below that trend line. So again, that's another sign of some more downward pressure. And then the next day it came down and it hit our next level of support here, which was the 50-day moving average, and it seemed to hold at that point. Yesterday the market went back up, didn't break to new highs, so it's going to be important. Now it looks like that it's going to potentially head up today. Today being Tuesday. The trend line here is important. We want the pricing to go back above that, both the 20-day moving average as well as that red upward trend line. If it does that, we're going to feel confident that this upward trajectory is still in play, and that we're not going to have some waterfall effect where the market just continues to drop previously. So if you look at this, you can see that again, once you blew through that 20-day moving average, it held up on the 50-day moving average. If you look historically, kind of the same thing back here in September last year. It came down, tested the 20-day moving average, fell down, held the 50-day moving average, and then couldn't get back above that 20-day moving average, and then blew back down through the 50-day moving average. And so that's, again, what we're watching here. We want to make sure that 50-day average is held and that we get back above that 20-day moving average. Otherwise, there's going to be some of these other levels of support that are going to be coming into play. So this next chart is a little bit more complicated. Again, it's another sign that we look for to really understand the direction of the market and try to get some sort of a competitive advantage to determine, are we at the end of a cycle, the beginning of a cycle. And so if you look at this is a comparison of the high yield corporate debt relative to the S&P 500. And you can see that when high yield rolls over, generally speaking, so does the S&P 500. But this bottom chart here shows the relationship of high yield relative to the S&P 500. So it's just a different way to look at it. And you can see once that trend line is broken to the upside, generally speaking, that's what kind of triggers a pull down in the market, or they work together in that regards. Again, when the relative performance of high yield begins to outperform the S&P, that's another warning sign. So we want to make sure that the trend line is held on the upside, and we want to make sure that the S&P is outperforming high yield. When that relationship reverses, it usually again leads to a downside in the market. So we are closely watching those levels. Last week we came up and we hit the trend line. So if that continues to stay below that trend line there, then we're going to be in good shape. But once that trend line is taken out to the upside, meaning high yield is now beginning to outperform the S&P 500, that's when we would again exit positions, raise cash, go a lot more conservative, and start hedging portfolios. So these are some of the things that we're watching. We've got a fairly decent sized cash position right now that if things continue to improve, we'll look to go back in. And if things start to break down, we'll continue to raise cash. So if you have any questions, feel free to reach out to us. Otherwise, we'll see you in 2 weeks. That's this week's episode of Markets in 5.